Round two. Let's try crude oil with Mr. Scott Bauer. I think he can hear us. All right, Scott. When does it end, man? There's no support left on the chart till like 42 bucks.
It is, like you said, it is a bloodbath, and I'm glad that we can hear each other now. You know, Friday when I was on set with you guys and we talked about this, we talked about how you have to psychologically be very careful in this marketplace. And technicals and fundamentals, you know, don't necessarily mean a lot when you get into this sort of trade. However, this is the absolute bottom end of this range here. We're at the lows that we hit a year ago, the bottom end of this range. I still believe that there can be money to be made here on the long side of crude by selling put spreads.
All right, I like taking a stand here, Scott. It's important. There's a few things here that just to kind of set up what we're discussing. So there's the chart with the support around 51 we broke through, but 50 bucks is still right there. You can dip below it maybe. Now what we've gotten over the last, month, 3 months coming into the big coronavirus sell-off was positive crude. Today we got some nice data in the U.S. That seems to be one thing that would work. Today it's not working, but at least there's some fundamental support for economic stability.
No doubt about it. And listen, here's what's driving it. Yes, it's the virus, but China demand is down 20%. That's the equivalent of about 3 million barrels per day. So that's what the market is taking under consideration right now. Yes, it's been supply demand. Which is overtaking the other? Is it the oversupply or the lack of demand? Well, right now, it's not the oversupply. It's the lack of demand that is really hurting here. And so, what's going to be done about it? Well, the obviously cure-all to this would be to see some sort of curtailing ending to the coronavirus, which we all hope for many reasons is the case here. However, the fundamental, like you said there, Oliver, still is in place here. And I believe selling some put spreads, keeping it close to the vest, taking advantage of this massive volatility, massive extra premium is the way to go here.
So you're not looking at getting big upside through calls, buying, ETFs and stuff like that?
Absolutely not.
Okay. Can you give me an idea where you want to go to find strikes to sell on crude, where you're getting the most bang for your buck with volatility right now, et cetera?
Absolutely. Look at, selling an at-the-money put spread, not even going down below the market too much here. So selling like a 50-48 strike, in crude futures, or maybe slightly below that. Because don't forget, what you also have on the docket, and this is probably good for a very short-term pop, which is why I don't want to buy calls. OPEC is going to meet early, right? They're supposed to meet in March. They're going to meet early. OPEC is trying to persuade Russia to join these talks, which seems to be what the holdup is right now. That should provide a little bit of a pop here. And again, I think the marketplace is really taking in a worst case scenario with the virus at this point. And so any sort of curtailing of this, any sort of slowing down, any sort of positive news here, and I think you could get a real easy 5% spike in crude. May not hold, but I think you can get a real big spike real quickly.
All right, like it. Appreciate the insight here, Scott. The trade right now we're at a hard 50 bucks even crude oil.
Yep.
What a session. We'll keep an eye on it. Mr. Bauer, thanks for jumping on, sticking with us. CEO of Prosper Trading Academy.